Welcome to Markets Now. I'm Michelle Rook with Tommy Grisafi, Advanced Trading. Lots of red on the board in grain and livestock futures trade on a Wednesday, except for old crop corn. And Tommy, let's talk about the sell-off that we have seen in especially corn and soybeans. We're at 3-year lows. Has this been all about weather, and are we justified at being at these low levels?
We are at those low levels today, and margins will be collected based on today's close. Maybe tomorrow's different, but what's different look like, right? A 10-cent rally, a 20, a 50-cent rally in corn, Michelle, only gets us to 450. I'll give you an example. A December $5 call, which has 100 and some days left till it expires, is only worth close to 3 cents. I mean, the amount of money that's been pulled out of these premiums of long call options, or the amount of money that the funds have added to these shorts. We're going to have another look at how much the funds have added here later in the week, and I bet you're going to see again that the funds are pressing the gas. The funds have the money. The stock market's at all-time highs, both in the S&P and NASDAQ, and the Dow Jones isn't too far behind. Interest rates are still elevated, and folks are looking to make money on something. And some of these hedge funds are going to show tremendous profits coming into June, the way we slid down at the end of June. And if we could have a really bad month in grains, maybe after July, we could start to see things short covering happen. But we're going to have harvest pressure. We're going to have that last sweep of the bins, and the grain from the south is going to start to hit the market. Not to mention, demand's not all that great. We did have some sales today. Nice to see China on the books. We'll take 10 more of those just to get things warmed up. Be nice to see Mexico buy some corn, or anyone buy some grains from the United States, Michelle.
So you mentioned the funds being as short as they are, which is unusual for this time of year, and they're probably record short in corn. Do they keep pushing that side of the market, and what could change that? What could get them to change their trend?
They will continue to do it till it doesn't work. Now, as they get in, as they start to get out, it could get really ugly. If there's not a lot of farmers selling above that, you could see a big air pocket. Big bear markets have vicious short covering rallies. Wouldn't surprise me at all to see corn have a plus 30-cent week here in the weeks to come. But what it get us, Michelle? We'll be back to 435 corn. For harvest delivery will be $4 cash. So maybe a little demand comes in, maybe for some reason someone says there's too much rain or more hail damage or some combination of that. The next thing we'll be looking at, if you wanted to know something that could get the markets rallying, and we'll go back and look at this in 6 weeks from now, an early frost up by you in South Dakota, North Dakota, Minnesota. A lot of crops maturing slowly, too wet. Going to have a lot of wet bushels of corn. We need more heat units. Early frost decimates many bushels, but we won't know that till the night it happens.
So do you think there's a lot more downside risk in corn and soybeans in particular here? I mean, we're getting close to $4 on December corn, close to that 10.50 mark again here in the November beans. Are those areas going to hold for support?
Well, we drew some lines today on ATI Pro Media on our live stream we do every day at 9. Give those boys a plug. But when you look at a monthly chart, we spent an incredible amount of time from 2014 to 2020 lows well below these levels. So yes, I do think historically, if you look at a yearly chart, grain prices still look high historically. Now, I know the world's changed and input costs have went up and everything else. But if the market's allowed you to sell corn $2 above your cost production, I do believe the market will allow you to sell corn $2 below your cost production.
But you don't think this is just about the big crop coming, it's about the big crop that we still have in farmers' hands?
Absolutely. Between USDA numbers and how we look at space needs here at Advanced Trading, there's an incredible amount of old crop that's been hiding around. I had a young farmer call me from North Dakota, not a client, but he said he was holding all his 23. He did need a little bit for cattle, and he had nothing done in 24. He said, what are you seeing out there? I said, of course, most people I know, I would strongly recommend that 23 is gone. They have some 24 sold and the rest protected, and that they start working on 25. So you have a young man out there who has all of last year's crop, nothing done for this year, nothing done for 25. In my view, that young man's long 3 years crop in a market that's absolutely collapsing. How many more people, Michelle? I ask, I don't know. How many more people are out there like that who they're just not going to call us and confess their sins that way? So yes, I believe today, yesterday was really like a time when people said, I need help, and they're asking for help. And I'll put it out there. We're always willing to help people get control by setting a floor and moving on. The ultimate floor that's going to get set, Michelle, is crop insurance. We are getting the crop insurance levels, and that will help stop some of the bleeding. That could be interesting with people with 85% crop insurance.
Yeah, that's a good point that you make in terms of that setting a floor here, at least for the market. We're also going into the reports on Friday, and what you said about old crop quarterly stocks, that's going to have to be rectified Friday. And so there's some bearish fear about that too, isn't there?
Yeah, and advanced trading didn't have, we had our ending stocks a little lower and we didn't have this bigger acreage number. So I think we were more of the norm, thinking 90 and a half million acres. We thought we were using a little bit more corn. All of a sudden the acres grew, which makes ending stocks grow. And it gets complicated. We have too much. So what could save us? Demand, that would be great. But yes, the what would be great to see on Friday is we had a bearish number in the markets rally. That would be a great thing to see on Friday. Markets usually bounce or stop going down when they look pretty bad. And I have to say, upon recording this, the markets look pretty bad, Michelle.
Yeah, they do. Um, Wheat market, do you think we've had additional harvest pressure because the yields might be better than expected? And will that show up in the report on Friday?
I don't know if it'll show up on Friday, but I know that it is harvest also in Russia. And even though they did have problems, whether it be a frost or production problems there, a drought and a frost all in one, right? All within a few weeks. They still have a wheat harvest and they still have an incredible amount of wheat. Even in years of short production, we have harvest pressure. It happened up in North Dakota in 21. We had extremely short wheat crop, but we had harvest lows happen again. That's happening at a world level as we speak, Michelle.
Yeah, so I guess we should have expected this. Cattle market, what do you think there? Third day down. Boxes have kind of rolled over. So do you think the futures market is doing the same? Are we topping there?
Seeing a lot of activity and options. Great question. Seeing a lot of people buying puts, whatnot. A lot of policies being written of LRP. I do have to check on what we can see in that. But there's different ways to hedge cattle, and they're at such a high level that even if you're involved in the cattle industry, you still have to protect them. You can be as bullish as you want, but you can't watch the cattle break $20, $30. What have they taken off, Michelle? Maybe $6, $7 here in live cattle last 3 days. That can be just a start. As you know, we've seen some 25-point sell-offs here already this year. So risk needs to be managed in cattle. I understand the numbers. I understand the bullish fundamentals, but even rich people get tired of paying a lot of high prices for beef and everything else. With the 4th of July passed, I think you'll see a little bit more switch. Not to add insult to injury, if you couldn't afford the steak, boy, pork chops are on sale today. Did I see that right, Michelle? Did you tell me hogs were limit down?
Limit down, but we also had new contract lows in many months again. So not a good day for the hog folks.
No, and the only optimism I could have for a hog producer is meal and corn got a little cheaper. That's not going to get it done. So it's funny how so many industries could make money, how ethanol could do well when corn's higher, how sometimes different folks who feed animal are do okay with higher corn prices, and then you think when corn goes down that all these other things that like affordable corn would explode in profitability. It doesn't always work that way. It's one of agriculture's many mysteries.
Yeah, and today's one of those head scratchers for sure. All right, thanks so much, Tommy. Tommy Grisafi with Advanced Trading. This is Markets Now.